Right, so what counts as remitted income? If you're watching this, you're probably slightly more advanced, so we'll just dive into it. Some countries have a remittance-based system, which basically means that you're only taxed on the money that you bring inside of their country. But if you keep everything that you earn outside of that country, then you're not taxed. However, if you do bring it inside of the country, then you're taxed on that money anyways. Some countries like Thailand have this system, Cyprus as well. And basically, why are we looking at this? I mean, you probably know if you have a US LLC, you can pay 0% tax on the LLC. Basically, it's not taxed at a corporate level if you're not American. And then if you manage to keep all the money outside of Thailand, then you're not taxed in Thailand as well. So basically, there's this scenario with the LLC where £1,000 comes in, you're not taxed at a corporate level. And then when you take it out, you don't bring it into Thailand. So you get to keep everything. And so in this way, there's this like loophole where you're not taxed. You probably have an LLC. Maybe you're thinking about setting one up. Everyone and their nan has a US LLC. It's a good vehicle. It doesn't always work, but in this scenario, it works pretty well. So what counts as remitted income? We're using Thailand as an example because most of my clients are from Thailand. They're not Thai people, but they live in Thailand. So income brought into a Thai bank account. That's remitted income in a tax year. If you're a tax resident in Thailand and you make money and then you bring it into a Thai bank account, you send it to a Thai bank account, that's yours. That's brought into Thailand. You have to pay taxes on it. Debit, credit card purchases from a bank account with money earned while a tax resident. So this is a bit complicated. Let's break it down. If you use your card, are you taxed on that money or not? It depends whether it's money that you had from before, or if it's money that you earned in the tax year while you were a tax resident. Obviously in 2024, Thailand changed the law slightly. So now income that's remitted into Thailand is all taxed, regardless of the year it's brought in. But that's only for the period you're a tax resident of. If, for example, you lived in London, you worked in investment banking for 3 years, and you got your nice chunky salary, and that money was actually taxed in London, which, you know, it was via PAYE, that money is not taxed again in Thailand, regardless of whether or not it's brought in. Even if you bring it in, that's money that's already been taxed. Like Thailand has no taxing right on that money because the UK already taxed it before. But if it's income that you made during the tax year, you know, during the period you're a tax resident in Thailand, then that money is taxed. So how do you know whether it's money that you had from before or if it's actually income from when you were a tax resident? That's a big gray area. So we'll see how to deal with that. And finally, assets purchased in Thailand with money earned while a tax resident. So again, if you decide to buy a house in Thailand, but it's from money that you had from before living in Thailand, and that money's not taxed. But if you become a tax resident of Thailand and then for the next 3 years you make quite a big chunk of money, you keep it outside of Thailand, it's not taxed. The moment you actually buy the property in Thailand, that's remitted into Thailand. So you have to pay taxes on it. So this is what counts as remitted income. This is like worldwide. This is like generally accepted. Like even in Cyprus, even in the UK, they had the non-doms, you know, they could claim to be taxed on a remittance basis system. So only on the money they brought in. And these are the criteria. Right? But what about in practice? Look, assets purchased in Thailand, you're 23, you're 20, you're 18, you're 27, 31. You're not going to buy assets in Thailand. You're not going to buy a car. You're going to rent a scooter. You're not going to buy a house. You can't even own land as a foreigner in Thailand. So assets just generally doesn't apply to you if you're an online entrepreneur. Debit credit card purchases from a bank account with money earned while a tax resident. So again, I've covered this already, but I'll just give you another example to drive this home. Let's imagine for 2024, you're a tax resident in the UK. Yes, the tax year in the UK goes from April to April, but just let's ignore that now for simplicity. And for 2024, let's say you have 20K in a UK bank account. There's 20K in there. It's your money. You can use it however you want. Now, 2025, you move to Thailand, you become a tax resident in Thailand. You make, say, 80K from your business and you send 20K into that same UK bank account. So now there's 40K in that Lloyd's bank account. 20K is from 2024. 20K is from income that you earned while you were a resident in Thailand, you know, while you were a tax resident in Thailand. So the problem here is that money is not taxed because it's in a UK bank account. But if you spend it, if you're spending the money that's earned while tax resident in Thailand, then that money is technically taxed. But if you don't, then it's not. So now in that bank account, in that same UK bank account, there's 20K that was there from before and 20K that's there from Thai income, basically. It's not Thai income, it's like offshore income, but you know, sent to that bank account while you were a tax resident in Thailand. So there's 40k in this account. When you go and tap your card, what happens? What money are you spending? Are you spending from the 20k that was in there from before? Are you spending from the 20k that you sent while a tax resident in Thailand? Can you choose what money you're spending? No, because it's like all pulled together. Is it split in half? Is it an average? I don't know. I don't even know, right? There's no infrastructure to even check. So it's like, yeah, technically credit card purchases are taxed if it's money that's earned while a tax resident in Thailand. But how do you know? Who knows? So it's a big gray area. Can you get away with this? Probably you can. Probably you can. This is not tax or financial advice of any kind. If you want my help, click the first link in the description. It's a funnel, but I mean, if you want to go through it, do it. If you don't, doesn't matter. And finally, income brought into a Thai bank account. So this is like the only one that's clearly tracked, because Thailand has all the information about this Thai bank account. If you want to send money into a Thai bank account, that income is taxed clearly. And that's generally what you end up declaring in your tax return. It's like, if you bring income into a Thai bank account, that counts as remitted income. That's the easiest way of remitting income, and that's the easiest way to check. So if you want to be careful and not be taxed in Thailand, don't buy assets, be careful about the credit cards and the debit cards that you're using, and don't send money to Thai bank accounts. As simple as that. That's what counts as remitted income.